Let me ask you a question. Have you ever made great money, but when you go to apply for a mortgage, the bank tells you, sorry, but you do not qualify? It doesn't make any sense, right? In this video, I'm going to break down the real reasons self employed borrowers struggle to get approved, and more importantly, how to fix those problems. My name is Tanner Goktepe, and I'm a mortgage loan originator with the Mortgage Skyhill Team, and I specialize in helping self employed borrowers, business owners, 1099 earners, and real estate investors get approved when traditional banks say no. Because here's the truth, the mortgage system was not designed for self employed borrowers. Most loans out there are built for W 2 employees, people that have pay stubs, salary, or easily predictable income. But if you're self employed, you're basically running a mini business in the eyes of the lender. And that's where all the problems begin. Let's start with the number one issue I see every single day, your tax returns. Here's the problem, you may make 150K, 200K, or even more. But after deductions, on paper, you may only be showing $40,000 income. And guess what the bank uses? That lower number. So now you're sitting there thinking, how am I making this great money, but I can't qualify for a mortgage? That's typically the disconnect. Number two is inconsistent income. If your income goes from 80K one year to 120K another year to 90K the following year, the lender doesn't celebrate growth. They average it, or worse, they take the lower number. And now your qualifying income drops again. Here's another big one most people don't know. Most lenders want to see 2 years of self employment, consistent or increasing income. If you do not have that, it becomes much harder to qualify, even if your business is doing amazing right now. Now, let's talk about what really frustrates people, the extensive paperwork. You're going to be asked for tax returns, business returns, profit and loss statements, bank statements, and possibly even transcripts from the IRS. And if one thing doesn't match, you get hit with condition after condition. That's why self employed loans typically take a little bit longer than conventional or government loans. Now, here's where deals actually fall apart, debt to income ratio. When your income is reduced because of deductions, averaging, or conservative underwriting, your ratios get worse. And that's one of the top reasons loans get denied. Let's be real for a second. This process can feel extremely frustrating. You're thinking, why do they need all of this? Why is this so complicated? But the reality is, lenders are required to verify everything. They can't just take your word for it. Now, here's the good news, there are solutions out there. So you may be asking yourself, what are the solutions? If you work with a mortgage broker like myself, I have access to over 75 lenders, and about 30 of them work primarily with self employed individuals. We have more than just business bank statement or personal bank statement programs. We also have no doc, no income programs, profit and loss only programs, and a lot more. I would love to be your loan originator and hold your hand through the process of buying a home. Feel free to give me a call directly at 813-568-2291 or visit us on the web at www.mortgageskyhill.com. Thank you so much and have a great day.